Hi, I'm Chris Summers with Unhedged.
And I'm Austin Hankwitz.
We are doing another Investing Ideas edition today, and we are going to talk about Olaplex. We're recording this on Thursday, September 30th, and this just happens to be the very day that Olaplex is going public. So the stock listed and started trading a couple hours ago. I'm pulling it up here on Unhedged. It looks like first trade was around $12.20 at $25 per share. It's currently trading around 24 and 20 cents. We'll pull up the prospectus and start analyzing it in a bit. But first, Austin, you want to give a quick overview and background on Olaplex and how you found it and why we think it's interesting?
Yeah, no problem. So I'll answer that second question first, how I found it. I found it on unhedged.com of all places. Every Monday, they pull together a week ahead sort of post that breaks down what's happening in the coming week. And one of the things that was happening was Olaplex. I didn't recognize the company, but as I was sort of digesting what Olaplex does and sort of what they do, which we'll get into in a second, I saw some incredible little key highlights that caught my attention. So let's talk about that.
Great.
Olaplex, ticker OLPX. They're a beauty company. They sell hairline and sort of hair care products that help repair damaged hair. As a guy who's never had damaged hair, it's hard for me to talk toward that. But every single girl I've talked to about this company has said nothing but great things about them. So that's interesting, right? But back in 2014, Olaplex disrupted the professional hair care industry by creating this bond building category. Their initial 3-product offering was sold exclusively through professional channels such as salons. But over the years, the company's expanded their distribution strategy to now also include specialty retail. That includes Sephora, Ulta Beauty, as well as direct to consumer through Amazon. So according to their S1, Olaplex is the #1 bond building brand in professional hair care, the #1 hair care brand at Sephora, and the #2 brand on Amazon across their competitors regarding bond building. In 2020, so the height of the pandemic, the company began developing other products for their customers to address 3 key uses. The first one is treatment, the second is maintenance, and the third is protection. Right. So from the treatment perspective, they have this, patented technology that can repair the hair, the human hair that's destroyed through chemical, thermal, mechanical, environmental, and the aging process. They also have this maintenance and protection side of things, right? So, according to Olaplex, they've strategically expanded their product line over time to create sort of a self-care routine that their customers look forward to and rely on every single day. And so across these, 7, 8 different products, this company is able to treat hair, maintain it well, and protect it in the future. So, how does the company make money? 55% of the company's revenue comes from sales through salons, these professionals who are saying, hey, come on in, let's repair your hair before your next coloring. And then from these though, right? So after these people go in, get their hair figured out with their hair salon, they now have a little bit of brand awareness. And now the next time they go to Sephora, they go to Ulta, or maybe when they're shopping on Amazon, that's when they begin to pull the trigger on actually buying more product. As it relates to the professional for a second here, what's interesting is Olaplex explains the relationship with the Beauty Systems Group, BSG, which is a salon network, Sally Beauty, 5,000 stores that sell 10,500 SKUs across Paul Mitchell, Wella, Matrix, and others. 5 of the 7 products that Olaplex sells are the best selling in all those categories. And what's interesting to me about that specifically is this company is not just for people with straight hair. It's not just for people with curly hair. This company it makes a product that addresses every woman's needs around the globe, right? So like out of the 5,000 salons and distribution points across the globe, which includes Spain, Germany, Chile, France, Canada, the UK, right? Beauty Systems is massive. 5 out of 7 of this company's products were best selling in those categories, which is pretty interesting. Right. So after the professional hairdresser now performs their treatment on the client now, like I said, understands brand awareness, and 35% of customers purchase Olaplex products after being introduced to the product by the hairdresser, obviously through specialty retail or direct to consumer, with 50% of those customers purchasing Olaplex products online. Very interesting as well. So this company got really popular in the last 18 months. People are posting about it on Instagram and TikTok, Facebook. It went super viral. They're the #1 earned media value brand in their cohort, which is, I think, 2 times more than L'Oreal, 4 times more than Lululemon, just to put things in perspective, 5 times more than Estee Lauder, and 6 times more earned media than Peloton. Insane. And then finally, thinking towards their financials, and feel free to hop in at any time, Chris.
Sure.
This year, they've experienced, I guess in the first 6 months, $270 million in revenue, which is a 171% increase over the about 100 million in revenue in the first 6 months of 2020. What's interesting to me is inside their S1, they have this specific call out that says, our business has historically been influenced by seasonal trends, common to traditional retail selling periods, and the results of our operations typically are slightly higher in the second half of the fiscal year due to increased levels of purchasing by consumers for special and holiday events. So it sounds to me like sales could continue to increase, or I guess accelerate now in the second half of the year. And if we begin to look back at how that kind of transpired in the last half of 2020, it accelerated dramatically. I think it was up 2x. I think in the first half, right, it was 99 million or so, and the second half was about 183 in revenue. So seeing that sort of acceleration is very interesting. But I think at the end of the day, women are super excited about this company going public. This has been an absolute movement across social media that I've seen. Tons of viral content has been published about this company. A lot of people are excited about investing into a company for the first time, and this being the company they invest into. And with margins like these, which I'm sure Chris will get into here in a second, and growth projections like these, Olaplex to me is interesting and exciting.
Awesome. Let's take a look at the IPO prospectus, also sometimes called an S1, and look at some things that kind of stood out to me and that I thought were interesting. So if you go over to Unhedged and pull up Olaplex, click on filings, they don't have a lot, but I'll just checkbox prospectuses to get right there. When companies go public, they file a Form S1 and then they amend it over every couple of weeks as they get feedback from the SEC as they prepare to go public. And this is the document that you really want to refer to before investing in a new stock that goes public. This is going to tell you everything you need to know about the company, its history, how it works, its product, its strategies, its competitors, how it got to where it is. In the case of Olaplex, I'll quickly just point out a couple of things that are a little not unique, but not as common with IPOs nowadays. In the case of Olaplex, because they're so profitable and so successful, they're actually not raising any capital in this IPO. A lot of times in an IPO, a company issues new shares and they raise capital, and that's called a primary share issuance. In this, it's all secondary shares being offered by the selling stockholders. And you can figure out who these stockholders are, when they got involved with the company, and a lot of the history behind that in the prospectus. I like to go to the table of contents, and there's a section here called Principal and Selling Stockholders. We can see in this table that Advent Funds and Moose Partners are collectively selling the 67 odd million shares that are being offered here. And then you can also see the total number of shares outstanding. I already highlighted that in the document here. So post IPO, there'll be about 650 million shares outstanding. We can see it's trading right now. You can see it ticking in real time here at $24 and change. So market cap of about $15 billion. Advent is a very well-respected private equity fund with a lot of history. And during their ownership, the company incurred some debt. So they've got around $800 million of debt outstanding via a term loan. So you can see that on the balance sheet. So all in all, the market cap's around 15 billion. The enterprise value is around 16 billion. And as Austin said, they're on pace to do around 600 million of revenue this year. Another thing that's kind of interesting about it to me is the margins are very, very high. They're currently tracking at around 65%. You can see in the first 6 months on 270 million of revenue, they had 150 million of operating income. And then they have these non-cash expenses, the amortization of intangibles that relates to the business acquisition in the beginning of 2020, step up in inventory value. It's a non-cash expense. So you could add that back for an EBITDA calculation. So next, why don't we look at the breakdown and attribution of their historical results and see how it's gone by channel. And usually you'll find that in the management's discussion and analysis, which in this case is also one of the items in the table of contents. You can get right to it. So as Austin was saying, the majority of their sales currently is through the professional channel. And then they have specialty retail, which is largely Sephora and now also Ulta Beauty and Amazon. And when you go through the prospectus, we already skipped past this, but there's a section called risk factors where the company will talk about, business risks and other things related to their business and the offering. And in the case of Olaplex, they talk about how the largest customers each account for 10% or more of their revenues. And that would be Amazon, Sephora, and the beauty network. Anyhow, let's get back down into this and take a look. So you can see the specialty retail channel has grown dramatically year over year. And a lot of that has been as they've sold into Sephora and entered these new channels. And then they also had really strong growth in DTC, which is direct to consumer. I'm sure they had a benefit from COVID, people shopping from home, but that growth and sell-through has continued in the first half of 2021, which bodes very well for the company's brand awareness, a concept called its Net Promoter Score, which is kind of a proxy for how happy consumers are with the product. Mm-hmm. So yeah, overall, I mean, the company is growing very well. The products seem to resonate extremely well with the end user consumer. And they've got growth opportunities now in skincare as well, as Austin pointed out. So Austin, any comments or reactions on that? Then I'll talk about another couple little things that you should always keep an eye out when looking at consumer product companies like this.
No specific callouts, Chris. It's so interesting to me to see a company who half of the demographic. I mean, I've never heard of them, right? I don't know if you've heard of them, but I certainly have never heard of this company. But then we look into it like, wow, this is such a good, in my opinion, a solid looking business, right? It's very interesting. But it was completely. I would have never discovered it because I don't use the products. I think that's just too funny and ironic.
Nice. So another thing I'll point out, and I can actually use the intra-document search here within Unhedged. When a consumer product company is growing rapidly, they often enter new channels. And when you get a new customer, those customers typically place upfront orders that are larger than the recurring orders because they've got to stock all the shelves. So as a company expands, and this actually happened with Beyond Meat a little over a year ago, when they had the new agreements with some of the fast food restaurants and some of the larger grocers, they sold a lot to stock all the shelves and to fill the inventory and the supply chain. And then the sell-through didn't come through as strong as that initial adoption. So the revenue estimates ended up falling short. And that happens with these. In the case of Olaplex, I did a search here. So you got a highlights tab here where you can see all my highlights or your highlights. You can show only your own, etc. And I wanted to search for sell-through to see if they're talking about it. And they do talk about it, and they talk about the sell-through rate being 134% compounded 18 through 2020. That's within Sephora. There's not a lot of quantification beyond that, but they are obviously aware of it. They're talking about it. And to have a compound growth rate sell-through at that level does suggest that the products are largely flying off the shelves as soon as they're stocking them.
Very cool, man. Well, this was interesting, certainly an interesting idea. Maybe I'll see you using some Olaplex soon, Chris. Huh?
Yeah. One other observation I would make here, the margins being as high as they are, 65% on an EBITDA basis in the first half of 2021. A lot of times when companies trade enterprise value to revenues, or you're looking out 3 or 4 years, a lot of the story is often around margin expansion. And 15 years ago, a way to make a lot of money investing, which most people understand now, would be to buy a company that was doing a margin of, say, only 2%. So say the company has $1 billion in revenue, 2% margin, so they're only doing 20 million in profits. 15 years ago, the concept of enterprise value to revenue was much less popular than it is today. Back then, things largely traded on either enterprise value to EBITDA or price to earnings. So if you've got a company doing a 2% margin on $1 billion of revenue, and they've got a 4-year plan to maybe only grow sales 5 or 10%, but get the margins up to a 10% margin from a 2% margin, you can end up with revenue growth of only 20 to 30%, but operating profit growth and earnings growth of 6x. So if you imagine a company growing revenues at 5% for 4 years on $1 billion revenue base, and taking the margins from 2% to 10%, your revenues go from $1 billion to $1.2 billion or so in 4 years, but the profits go from 20 million to now a 10% margin on that 1.2 billion, 120 million of profits. So you just had a 6x increase in profits. Now, in the case of Olaplex, because they're already so profitable, there's unlikely to be a large margin expansion story here. So you're really banking on revenue growth. And when consumer product companies need to expand rapidly, a lot of times they do need to invest in sales and marketing, and that can pressure margins in the near term. So just another thing to kind of keep on the radar. The three things that stood out to me that I don't necessarily think are red flags, but are things to keep in your mind are: one, the IPO is really just selling shareholders, taking some money off the table. Two would be the high margins. And then three would be keeping an eye on that sell through and making sure that the revenues are not just inventory billed by the customers, the distributors, Sephora, Ulta, the beauty supply networks, et cetera, but actually reflects true end user demand.
Chris, you are a wealth of knowledge, my friend.
Thank you, sir. Well, this is an interesting one. This is going to be fun to watch. I mean, it's not terribly expensive for how profitable and how quick they're growing. And the net promoter scores, and you guys can go on Amazon.com and look at the products and the reviews yourselves. I mean, people love this thing, and there are tens of thousands of reviews on all the products, and they're all 4.5+ stars. So they're doing something right.
Absolutely. Sounds good, man. I'll talk to you later.
Awesome. Thanks a lot, Austin.